All right, looking at this again, here's the T account, and actual factory overhead is always debited. Then the amount we apply out, we move out with a credit, so we're left with a balance. If we over applied, then right here we get 22,400 and 24,000 over here, so we get the 1,600. So we over applied factory overhead, and so the total factory overhead cost variance is favorable. So over applied factory overhead balance and the favorable total factory overhead cost variance are the same. So if it's favorable, that means we applied too much and we actually had less than what we applied. So the variable factory overhead controllable variance and the volume variance can be computed by comparing the factory overhead account with the budgeted total overhead for the actual level produced. The difference between the actual incurred and the budgeted overhead. If the actual overhead exceeds the budgeted factory overhead, then we have an unfavorable variance. If the actual factory overhead is less than the budgeted overhead, then we would have a favorable variance. Okay, so volume variance would work the same way. Okay, so here is a visual of what we just discussed with the T accounts. So here's actual. Here is applied. So we applied more than we actually had, so we over applied and it was favorable. Now, some of this favorable is the net is favorable because we had more favorable than we did unfavorable. Standard costs may be used as a management tool to control costs separately from the accounts in the general ledger. Sometimes, let me read that. Many companies include standard costs in their accounts. One method for doing so records sustained costs and variance at the same time the actual product costs are recorded. When they do it, it's going to look like this. So in this situation, they bought materials on account. We're going to debit materials for the standard cost and then debit the direct materials price variance for the amount in this situation that exceeded the standard price. And of course, for the accounts payable, it's going to be for the amount that we actually owe the vendor. When we use our materials, we're going to take it out of materials for the standard, and we also take it out of the direct materials quantity variance and put the entire amount into work in process. This exercise asks us to journalize the entry. So we would calculate our standard and then our variance, and the net would go into work in process. The journal entries to record the standard costs and the variances for direct labor are similar to those for direct material. So here is a summary of the journal entries to record the standard costs and variances for direct labor. Work in process is going to be debited for the standard cost of direct labor. Wages payable is credited for the actual direct labor costs incurred, what we're actually going to pay them. The direct labor rate variance is going to be debited for an unfavorable variance and credited for a favorable variance. Direct labor time variance is going to be debited for an unfavorable variance and credited for a favorable variance. The factory overhead has always been done like this, because if you remember, when we debit factory overhead, that's actual, and then we had a predetermined, that's really our budgeted. We always debited for actual, and then we always credited out our standard. That is the amount we estimated. So when we determined if it was over or under applied and we closed it out, we were actually determining our total factory overhead cost variance, okay, by comparing the actual factory overhead with the budgeted factory overhead. So by comparing the budgeted factory overhead with the applied, your variance can be determined. And when goods are completed, finished goods is going to be debited and work in process is credited for the standard cost of the product transferred. And then at the end of the period, the balance of each of the variance accounts indicate the net favorable or unfavorable variance for the period. And these variances can be used in the income statement prepared for management's use. This is an example of what the income statement may look like. You see the unfavorable and the favorable. We spend a lot of time in the financial part of this, but there's also some non-financial performance measures. Let's skip to those. Some non-financial performance measures that are important to management. For example, inventory turnover, how quickly you're selling your inventory, percent of time, on-time delivery, what percent of the do you deliver on time, the how long elapsed time between a customer order and product delivery, how long is it taking between the time you're getting a customer order and you deliver it, customer preference, rankings compared to competitors. How do your customers see you as compared to your competitors? Response time to a service call. How long does it take once they call for you to be able to respond to them? Time to develop new products. Employee satisfaction. Number of customer complaints. These are all non-financial performance measures. And we can look at these as inputs that lead to our activity or process that leads to our outputs. So here's the visual inputs that lead to our activity or process that lead to our outputs. For example, a fast food restaurant. These are the inputs: number of employees, employee experience, employee training, fryer reliability, number of new menu items, fountain drinks available. And the activity that we're going to be looking at in this example is counter service. The output from this is line weight, percent of order accuracy, and friendly service score. So let's work this exercise and see what it would look like for a baggage claim process for in airlines. So our process is the baggage claim process. So what are the inputs? We're going to identify inputs or outputs to the baggage claim process. The inputs would be the baggage handler training. So how well are they trained? And the time customers wait for return baggage would be an output. How long did it take for them to wait? The maintenance of baggage handling equipment, that would be an input. So how well maintained is that equipment? The number of baggage handlers would also be an output. Do we have enough people handling the baggage? And the number of damaged bags would be an output. How many are getting damaged? And then the on-time flight performance would be an input, because if the other flights are on time, that's an input to determine how the baggage claim is going to go. So let's check our work. Baggage handler training is an input. Time customers wait for their baggage is the output. Maintenance of baggage handling equipment, input. Number of baggage handlers would be input. Number of damaged bags, output. And then on-time flight performance is an input. So that is how you categorize these inputs or outputs. And that is the conclusion of chapter 23. Take your time, go through the videos and through the objectives, and then let me know if you have any questions.